Mic check and screen share check, please. Okay. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for uh, January 31st, 2024. Start as always with the hybrid uh, swing portfolio. We did a 90-minute session on the sniper um, for the book club tonight. That was so good that it's probably going to be a standalone 90-minute workshop at either 97 or 197 bucks. Um, Focused tightly on the sniper. It's the best 90 minutes I've done probably in 6 months. It was pretty good. All right, so this is Alcoa on 30-minute bars. It's a Fed day today, which is why you get that, which is why uh, almost no swing trades today except to get out of positions. So, uh, no trade. That was the magnitude of the daily move. The daily move was as big as the 5-day range on this thing. AI, no trade, huge range. Caterpillar, we had closed this one yesterday and just noted there were tradable moves inside here. Like if you're a specialist in Caterpillar, those are tradable moves on the 3 minutes. Particularly this one. That one is you'd have to be careful on that one as it approaches the Fed though. So I did not trade it. This one was Cliff. Now this one, just to review, out of this long sideways quiet channel, which we had tried a couple times and just grinding like 0 for 4 on scratches. And then we tried this one long 2 days ago, which failed. I mean, it worked to here, and then it gapped down, so we got out with instead of a 2R win, we lost 1.5. But then it immediately reversed intraday, so we got back on board when it crossed the Bollinger Band mean. Blew all the way to the top, and that one was at 5R intraday yesterday. So we added a second position, and then near the close, we just said, let's hold that one overnight. Today, it gapped up and kept going up, so we added a third position, knowing I'm going to get out before the Fed. This rolled over conveniently and hit the edge of the dragon, so we got out of that one with 3, 4, 5, 6, 7, 8, 9R on the first entry, 5R on the second one, 1R on the third one. So that's about 15R in Cliff. And that's why I trade that one. Now, it had an extraordinary move for the Fed, which terminated in the downward pressure, but there's no way I'm chasing that one overnight. There was such a volatile response today that I'm ready to trade this one after tomorrow's open, and we'll see which way it breaks. Was it a recovery of, is it buying a great company on a fire sale and it's going to resume? Or was that a turning point in the market and it's going to fail? I just exactly don't know. So I'm just ready to wait and see for tomorrow. Cliff is going to be a high priority though for that because of how much in play it is. I'm going to go straight to U.S. Steel. That was one of the few intraday swings I did. That one responded to the volatility and the bottom fell out of it going into the Fed, and then it dropped like a rock, rebounded to here, came back to here, and I had to make a decision on whether to hold that overnight or not. And that one is holding 5R. So I'm going to hold that one just because I think people are going to see that and say, oh my goodness, the sky is falling. I think that's I want to try on that one. Got a 5R cushion, hoping for a big payoff tomorrow. Okay, back to the regular schedule. CVS, no trade, not much response. DIA, this one was one where, oops, I forgot to, this should have been pulled over because we had two positions on that one on the swing. First one out of the sideways quiet channel, which performed well to here, and then it performed well yesterday to here. So we just held that, and then it monkeyed around. And as we're getting closer to Fed announcement, that seemed like as good a time as any to get out of it. And we were holding 3R on the first one, 1R on the second one. So that's +4. I thought when this started to break, I started to think about trading that on the short. It smashed all the way up here and then reversed down. I thought about trading this one on the short. It didn't take it, and then watched it do that. So that one tomorrow is going to tell you everything we need to know about the large caps in the U.S. economy, I think, in response to the Fed's announcement. So I'm going to put a bracket on that one and be ready to trade from the open uh, as one of my two high priorities. So it's VIA, CLF, and you're going to see Microsoft here as a way to play tech and as a way to play industrial America, and just based on the size of their intraday moves. Disney, no trade. It collapsed pretty well too, so it's putting at risk all of those gains. Devon Energy, man, I was so tempted on this one, elected not to. Learn to sit on my hand. EEM sideways, choppy, no trade on Ethereum either. Um, Mexico, no, all we did on Mexico was exit. The swing that started 2 days ago started selling off, so we cashed here when it got below the VWAP and started leaving the dragon. So we cashed one, two, three. That's about worth that's worth about 4R on that one. It had a negative response to the Fed as well. And so we'll be ready to trade that one as a priority. Um, Brazil, no trade, extremely volatile. Intel, no trade. International paper, that was selling off the same way Cliff sold off, but that one surprised me a little bit, wasn't ready for it. But because that has breached these two support levels, that one is a high priority for a short side trade tomorrow. So add IP to your short list. Real estate. Now, this is one I was really tempted to trade overnight. I did trade this one on the 30 because this is one that is more like a position play and on a change in economic policy as opposed to a tactical trader. And when that thing broke below all of this support, I gave that a shot. And then I said, God dang it, let me just take 2R and catch up with it again tomorrow. Just am adverse to holding much overnight risk after a surprise Fed announcement. Coke, uh, big sell off at the end of the day. Or I'm sorry, regional banks. This is Coke. My bad. This is one I did trade on the 30 minutes because this was a nice move to here, and then it rolled over, so I exited, and the VWAP was declining on volume, obviously, and then this rolled over and gave us a collapsing dragon. So I tried that, and then it hardly budged at all through the Fed except to the downside, and then it rebounded to here. And I said, that's good. Let's take 3. Gosh, more like 2. Let's take 2R on that one. Call it a day. That's a candidate for follow through tomorrow. Um, Regional banks, KRE, no trade. Uh, that collapse was something I probably could have done better, but I wanted to stay with the bigger indexes and the large caps. But that's the bottoms could fall out of that one tomorrow. When we look at a longer term, that gave back in one day all the gains of the last 10. So it has a real good chance to get down to this 30-day low in this region around 49. Um, Boy, that's going to be fireworks. McDonald's, all we did was exit. I missed the short side move. Merck, this is one that gapped way up and then peaked and then started rolling over hard. So I speculated in early, and all it did was just fail all day. It failed all the way through the Fed and then cashed at the end of the day for about 3R. I like that one on a breakdown. If it breaks through this support level, then this move here could easily come back to 119. By the same token, it had a strong move up from exactly this price level. So I don't know which way it's going to go tomorrow. It could go either way with strength. That's a perfect intraday trader for tomorrow. Critical state. Microsoft, big gap down below the Bollinger Band main, VWAP failing, 2R until the Fed announcement. Happy with that one. Marijuana, no trade. Nike, no trade. Missed that huge collapse. Nvidia, no trade. Big collapse. Clean energy, enormous, enormous sell off. Holy smokes. That's like 6% sell from here all the way down through the Fed to close at the low of the day, well below the support levels. So look for that thing to just drop like a rock again early for a quick hit. Rivian, no trade. SPY, you can see it was the big gap down. Sell off into the Fed volatility, and then a decisive downward move and closed right here at the low of the day. It gave back all the gains of the last 5 days. We've been talking about that for days at a time now based on the advanced level of the RL90 and the 30 and the risk Z. So cannot be surprised by that kind of adverse shakeout. Treasuries gap up in response to the equity weakness. Tesla, no trade. Walmart, no trade, and collapsing. That's a key indicator for tomorrow. And then U.S. Steel, we saw already. The big collapse, speculated short, and I decided that, in the last 30 minutes, I'm just going to hold my nose, use that as a cushion, and let's just see. Looking for a big payoff on the gap. Um, This was part of the summary of the sniper mindset that we covered in the um, book club earlier tonight. A flashcard from 4 years ago when we really put pen to paper. That's the sight picture of what we're looking at when we're looking through the rifle sights there. God dang, that's 4 years ago. Where does the time go? This was all of the summary of notes in this flashcard. Um, I'm going to hang it in the foundations course for you if you're a foundations student. Remember, you get lifetime access to that course, and all these goodies go into the foundations course just because. So if you're not a foundations course member yet, it'll never be cheaper than it is right now. I should say less expensive. Here's our sniper trade. So this is a symbol that closed here. Actually, it was going towards the close in this really tight compression channel right around the Bollinger Band mean. And this is treasuries on 3-minute charts. And then in the last 9 minutes of the day yesterday, it went from absolute disinterest to massive volume buying right here. Almost as if somebody knew. Now, I would never say anybody leaked the Fed's announcement at all. There's no way anybody leaked the Fed so that people could buy here knowing it was going to gap up open to here. There's no way they would do that. Um, but if they ever did, that's what it would look like. So this little rush up to here, and then the gap to here, and then the OR3 to here. And then in the second bar, it opened here and just took off. And that's the R10 risk box in the usual way. So there's our entry. And that's the standard normal stop, check or hold. And if this were to fail back to earth, we would be stopping and reversing right there. Check or hold. And if we wanted to be aggressive, we could go 1, 2R, and at the 2R battle drill, we could think about adding a second position north at that price level. Check or hold. I didn't add, I'm not going to double up on a Fed day. And this thing rolled over here. The R10 rolled over. So I activate the exit at the skin of the dragon and exit here. And that's 2R. 1 unit of risk, 2 units of reward. The same way we do it every day. It's like Pinky in the brain. What do we do tonight, Pinky? Well, same thing we do every night. Same thing we do every night, Pinky. Plan to take over the world. The sell-off comes right back to the R10 reversal, which comes right back to the open vicinity, the rising Bollinger Band main comes up through the VWAP. Should I be thinking about a COTA 2 here? And if I do, or I should say if you do, if you decide to buy that crossing of the VWAP, is this okay for your initial risk? It's a little bigger than the R10, but you'd have to, if you wanted it the same size as the R10, you'd have to commit to price breaking below the belly of the dragon. So you tell me, do you get long here? And if you do, is your stop at 1 or 2? And then um, you would never add a second position earlier than the peak of the RL10. And if this was your stop, that would be about 1, 2, 3 and some change. If this was your stop, that would be about 1.5. So if you're 2R battle drilling, you can't really get a second position until you get one of those two moves. Check or hold. If you take that entry, just tell me that you do by saying your stop would be at 1 or 2. Remembering you got 2R in hand, a market's money, and the VWAP is right here. So I'm seeing a lot of votes for take it with the stop there. Fair enough. I waited a little longer. Um, your stop at one, if you're taking that grade here, your stop at one was like right around in here. You would have gotten ticked out maybe. Um, I saw this and I decided to take this trade. Now you can take this if you got it long here and you get ticked out here. This is still a valid, that's an actual TSAR cross right there. And now I can get this kind of move here. That's the same as the R10. I end up getting a fractional on that one. And and whether you take that or not, you got to remember you're getting close. You're getting close to Fed time. So if you took this one, you paid for it with one of the two that you earned here. So you end up netting one. If you take this trade, you get a little, you net about 2.5. Either way, and that's treasuries. There's an implied volume in treasuries that you don't got to worry about the volume that's being traded. TLT is 3 times the size of the equity market, and uh, I I don't worry about liquidity on TLT. Now you can see the move into the Fed announcement, and then that thing exploded. But we're not going to monkey around with that one at all. That's a reasonable pre-Fed announcement sniper trade of the day on the biggest gapper. Traders. Here's Agnieszka. She was trading one of our interns. She's just crunching along here. She plays the breakout with the standard risk to the PSAR flip prior to the Fed. Sees the far side of the hill and cashes 3.6. That's where the Fed started to happen. What a nice job. 3.6. That's the Euro USD on 5 minutes.
This meeting is
Very,
being
very
recorded.
relaxed. Uh, Ilker working hard here with Alcoa. Nets 2.1. You can see that he gets aligned pretty nicely. After the initial loss, he gets aligned nice. There was more available. Span of control caused him to miss that one. He gives this a shot. Um, Cold feet, just at the wrong time. This one on that kind of big move, I like that entry right there. The 1, 2, 3. You can see the upper, like there was a considerable adverse move. You're playing back to this target. And then if it works, the second scoop, the same size, is not unusual. And then the Fed happens. But nice work on that one to net 2.1. Um, Ends up scratching with DIA, and that's where the Fed action was happening. So he's trading the pre-market. Mexico, stay out of the Fed. Net's 0. George, so this is 3 minute on the Bitcoin, so you can only go long. Unfortunate to scratch when we were up about 0.5, but that's reasonable. Can't short it. Perfect on this. This is a good entry and a great exit. I think this was a little late, but still that's not bad. And you cut it quick. You gave it a break after two losses. This one is an emerging dragon. Didn't work. That would have been the next logical one, which would have covered for the day. So not bad. There just wasn't a whole. I think that was people just waiting to see the Fed. See the VWAP hardly moved, and that's a pretty tight oscillation. Um, Perfect on Walmart. Reasonable efforts on DIA here. This opened, ran up, and started to work again. It rolled over. He cuts it quick. Tries the next breakout. We're too close. We're so close to the Fed in here that if you're going to do this and then exit here, you got to take that short. I would rather see you not trade that at all on Fed day. Uh, and the same thing I would say here for Mexico and EEM. Stay out of them on Fed days. Same with PBW. But this tells me that tomorrow there's going to be some specialty interest groups that are either going to pile on the collapse or going to see that as a value proposition and they're going to take it long. So let's see what they do tomorrow. Stay out of it on Fed day. And so David, three 3R, a good. I like the short, the quick exit. Cuts his loss again, but keeps firing, and then that pays for everything. I like this entry, but that's a really good entry too. Perfect exit, and pretty tight control there. Three execution R. That's as good as you can get on that one, I'm thinking. That was nice work. Um, Almost 4R in the usual way. And that little decay, it doesn't follow through much, so he covers and gets a little. PSAR flip, nails it, great exit. And then on the rollover and failing through, how nice is that? That's worth a shot, but playing it close to the vest. I respect that move. Um, this is the one. If you widen that stop, then you don't get nervous in there, and then you get that trade. Head to the reports. Yeah, there we are. Okay, sorry. So the 150-day look back. Here's our 10-day box, right? Our 30-day box, our 150-day box. There's the low and the high. So you can see just how big today's move was. It was almost all of it was, half the size of the 10-day box in one day's move. And this is a considerable rollover. So that sets up a buy on dip opportunity if the plunge protection team is going to come in and take it north to preserve that momentum for the Democrats. Or this was finally the first stage of profit taking after each of these big legs. I mean, that's four legs up. One, two, three, four. And that was the first little bit of profit. And we're still trying to preserve this much profit. So this is the big question. Is it a buy on dip or is it Katie bar the door? That's what makes tomorrow and the rest of this week really interesting. You can see on the 30-day look back now, these are daily bars. Again, just how big that move was. And all directional. Here was the open and there's the close. So all of this is signal. Big downward signal. Came right down to the PSAR. This was the previous all-time high way back when. So 10 days of gains are erased in one day. Well, not 8 days of gains. Here's the actual 10 day. So half of those gains happened in 2 days. The other half happened in 7 days, and this half was all erased in one day. So just how quickly volatility can turn. Next targets down here, PSARs, Bollinger Band mean, belly of the RL10, reserve wins. That's what it looks like on 30 minutes. The sell off. This was the Fed volatility, and it voted down. So this is the last little bit of support right there. And if this fails, that's not support. This is support. This was an intermediate support from a previous, from the daily time frame. So that's like target 1, target 2. The increase in volatility brings us back into bullish normal. That's the weakness in the sell-off. Still bullish strong, but risk off. And this volatility is going to start increasing. The Dow, Walmart, Merck were the sources of strength in treasuries for the min pains. Max pains, Intel, IBM, Cisco. So tech weakness. Little to no change. Um, Only a handful of auto framers. Intel, Tesla's a possibility, but the ones I mentioned earlier, I think DIA, Microsoft, Merck. Murder on the Orient Express. Everywhere you looked was just getting slaughtered. This is how bad the regional banks, KRE was. Today's little breakdown was minus 513 on the 2-day NDX. Holy smokes. And the S&P was minus 408. That's how big that move was. Treasuries and Japan, which is not Asia. It's Asia less Japan, so it's just Japan, not the rest of Asia. It's not the U.S. It's not Europe. It's Asia in the form of Japan. Walmart and Boeing in case of World War III. Last retailer standing, Main Street, America. Defense contractor, and you got to eat hamburgers at McDonald's. And the bankers are going to bank in times of crisis. Great big red fang. What happened the last time I did that? It had a micro gain sell up, and that set up the Kata 2 and challenge. So this doesn't automatically mean it fails. I mean, the last time you had a big spike, there it was. But this brought the percent stretch back under 1 standard deviation. We had a nice pullback, so this actually creates an opportunity for a move in either direction. And up until today, there had been some signs of short-term healing. But the 10 period z-score has rolled over. The 90 period showing the first sign of cracking, and the 30 has already pulled back, and this could be bad because it's at the top of this +1 -1 channel. So this could be the start of a correction of 8 to 10%. And that means the target would be down here about 465 if that corrects. And then that's where you're seeing some support. Okay. And that's everything we want to cover. And we shall see you tomorrow, ready to rock. Take good care.